Welcome. You're watching Budget Trade and this is Samina Nalwala. Railway stocks are literally on a high and with fresh highs ahead of the union budget. While the budget, which is going to be tabled on the 23rd of July, is seen as a people's budget, what's sticking for the railway counters? Stocks like RVNL, IRCON International, IRFC and a whole other bunch of listed railway companies were trading at their all-time highs. On Friday, the Union Minister Ashwini Vaishnav announced the production of 2,500 new general passenger train coaches and approved an additional 10,000 coaches. Talking about railway infrastructure, he said that about 5,300 kilometers of railway tracks have been added so far this year and about 800 kilometers have been added. Well, keeping that commentary in mind, budget stocks or Modi stocks, like they're more popularly known as, have been seeing aggressive buying interest. But let's go to my colleague Anushi first, who takes us through what is the sector expectation from the much anticipated budget in a few weeks.
With the upcoming budget, railways continues to remain in focus. We've seen a sharp jump up in stock prices of some of these railway counters. Look at an RVNL, 38% of gains in this last 1 week itself. Now, if you even look at 1 year, there has been a rally in most of these counters. Here again, IRFC leading the pack, 500% gains over the count, while other railway stocks also, if you see, most of them clocked about a 2 to 3x times of growth in their stocks. But what is happening? What's the budget allocation over the years? Let's understand that. So if you look at the FY22 to 23 period, 1.5 lakh of crore of allocation from the budget side for the Ministry of Railways, which has then increased to about 2.4 lakh crores, so 50% jump that we are looking at. Coming to the interim budget of this year, 2.52 lakh crore is what was the allocation. But you know what's interesting over here? If you go back to the 2003 to 2004 to 2005 period, the allocation was 8,000 crore. So we are seeing a sharp jump in this allocation over the years. So with this, again, we can just look at the railway track that they have built over the years to get a better sense. So during 2004 to 14, there was about 15,000 route kilometer built. But if we go back to 2014 to 23 period, we are almost seeing this number doubling to about 25,000 route kilometer. Again, major projects that continue to remain focused for this budget and even the previous budgets include the Gati Shakti cargo terminal, the Vande Bharat trains, Bharat Gaurav trains, as well as the Amrit Bharat stations and trains. Again, key highlights of this interim budget include implementation of 3 economic railway corridor programs. This was about energy, mineral and cement corridors, the port connectivity corridors along with high traffic density corridors. But what stood out for this budget was the conversion of 40,000 conventional rail bogies to Vande Bharat standards. So here, some of the key players that continue to remain in focus include Titagarh Rail and Jupiter Wagons. But other than that, also there were some key developments which happened over the years. This includes Cabinet approving about 6 multi-tracking projects across Indian Railway in 6 states. This project is estimated to be around 12,000 crore and this will be fully funded by the centre. So with this, we will be seeing about 1,020 kilometer extension in the existing network of Indian Railways. So these are some of the prime budget expectations that we can see for Ministry of Railways this time.
Interesting, sharing the markets already running ahead of themselves with regard to those expectations. But we have with us Ashish Modani, Senior Vice President and Co-Group Head, Corporate Ratings of ICRA, joining us to talk to us about a relatively smaller sector, but nevertheless very important at this juncture. Thank you, Ashish, for joining us this afternoon. Ashish, there's so much of excitement, conversations. We've seen the stocks run up significantly in the last couple of weeks to the run-up to the budget. The interim budget was exciting for rail counters. As we go into budget 2025 on the 23rd of July, what do you think is going to be the big bang announcements for the railway sector? To begin with, actually, will there be any big bang announcements in this, for the railway sector?
Yeah, hi, Samina. Good afternoon. What we are expecting at the overall capital outlay level, let me just talk from a broader perspective and I come back to the railway subsequently. We are not expecting a major deviation from this 11 lakh crore number that has been announced during interim budget. Because if you look at the first 2 months of the current year, that is April and May, the overall capex outlay is down by almost 14%. Now, Q2 being a leaner quarter, so a lot of ramp up is expected in Q3 and Q4. So we are not expecting a major hike or outlay increase in the whatever was announced in the interim budget at a broader level. But one should note that the 1.6 lakh crore delta that has been announced in the interim budget from the last year, the capex incremental, out of that 70,000 crore delta is largely driven by an item which is classified as new scheme. Now, because of that, what is interesting to see is how that amount of 70,000 crore get allocated within various ministries. So that is something that needs to be watched out for in the coming budget. But if you look at the railway outlay, capital outlay, it has grown by almost 12% CAGR for the last 5 years, and that is very, very impressive. Even the number that you were showing some time back, while the year-on-year outlay may look modest in a low single digit, but if you compare it with the FY23 number, it's almost 50% high number. So there has been a strong ramp up that has already happened. Now, what has benefited out of this is largely, if you look at the two specific segments, while we are talking about incremental tracks outlay, we are talking about multiple wagons and rolling stock manufacturer benefiting. But two specific things I need to highlight over here is the outlay which is towards the rolling stocks, and also the Amrit Bharat station, or what is railway station development. Lot of impetus is over there. Just to give out certain numbers over there, in FY23, the items under customer amenities, which is broadly cover the station development, that is only 2,200 crore. Now that has been hiked almost 7 to 8 times in the current budget. Now it is almost 16,000 crore plus. So the players in this segment are expected to benefit. Similarly, if we talk about the wagons and the rolling stock manufacturer, because of the all-time high order awarding that has happened, so all these wagon manufacturers are sitting on a very strong order book, and they are also going to significantly benefit from this particular thrust. But if you look at the broader thing, we are not expecting any material or major deviation from what was announced in the interim budget. Over to you, Samina.
Right. Ashish, just take a step back, and you talked about the capital outlay. Now I want to broaden this discussion, not just sticking with railways, but logistics as whole as well, because, I was having a chat with Tata Projects, and they said, for India to become a manufacturing hub, we have to bring down logistics costs. So I want to bring in road as well into this conversation. How do you think, or who do you think could be a key beneficiary of this increased capital outlay in terms of allocations? Which sectors stand to gain most in this space?
Zamina, like my team also tracks the road sector. So when you talk about road and railway combined, both of them are a major beneficiary in the last 10 years. And the statistics also showcase that. The current year, the number looks modest if you look at on a YOY basis. But if you look at in the broader perspective of the last 5-year or 10-year horizon, the number looks impressive. And both is like what you rightly told. If you want to become a manufacturing hub, we are talking about a 5 trillion economy. We are talking about reduction in the logistics cost. Railway will definitely play a very vital role, and so is the road segment. So both this segment, I don't want to differentiate between any one of them. Both of the segment will be a major beneficiary, and will continue to see a strong impetus going forward also.
Right. While this is going to be a significant beneficiary of the government's outlay and capex plans, what do you feel, or which companies do you feel stand to benefit the most? Because some may argue that a lot of this may already be in the price. One thing is winning orders, but what else needs to, before we go into companies actually, what else needs to be done in this budget to improve the balance sheet of these railway companies, improve cash flow, and generally make them or bring them up to speed with some of the other private sector players?
So, if you ask me, the two specific items that we feel, or the ICRA, we feel that needs to be focused on from the railway side is, one is the monetization thing. I think there is a significant lag to what was the initial target and the number that has actually been delivered. So, in monetization front, there is a lot of scope. And the second space is the public-private partnership. While in the road segment, we have seen a strong ramp up and things have largely stabilized, and the lenders are also very comfortable over there. But in railway segment, we have not seen much of the public-private partnership over there, and that's where the government has to put a lot of funds. So if the public or the private money comes over there and that gains traction, it will be beneficiary for the overall everybody in the system, and all the stakeholders will benefit out of it.
Right, and in terms of railway stocks, Ashish, or companies, who stands to benefit the most from this budget 2024 or 2025? Of course, what stands out for me is the fact that there's every morning RVNL is either bagging an order locally or internationally.
See, Samina, I won't like to comment on any company specific thing, but as a sector, if you ask me, we have seen a lot of competition in the road segment in the last 1 year because of declining the order inflow. So many of the civil construction entities, they have received station development projects, and they are building on their order on this particular segment. So this is one pie which is going to benefit some of the EPC entities also who are already executing projects or getting new projects in this particular segment. Wagon manufacturers, if you have seen that order book is pretty strong for the next 2 to 3 years, so they are also well placed on that front.
Right. Ashish, also, while you can't talk to me about specific companies, but in terms of preference, do you prefer the private players or the public sector, PSU players? Because the gains are very obviously in the PSU names more than what we are seeing amongst the private names.
Samina, if the capital outlay is going to increase, everybody in the ecosystem will benefit. So even if RVNL is getting these orders, eventually some of this will get subcontracted to the private players also. So at a broader level, if we look at almost all the players who are in the system will benefit out of it.
Right. And very lastly, Ashish, while you can't comment on stocks and you would like not do that, just at a more macro level, there are wants and there are needs, right? What do you think is imperative for the rail sector to see in this budget announcement?
Okay, so if you
and in terms of prioritizing the needs.
It's a very tricky topic because there are multiple priorities for the sectors. But if you see from the government point of view, 2 or 3 things very clearly stands out. One is the monetization. I think that needs to gain traction, and some measures needs to be taken in place so that they get certain money out of it which to fund incremental growth or capex in the railway sector. Second is the public-private partnership. Private sector needs to be encouraged over here. And the third, again going forward, will be the investment towards safety, and I think that will continue to be I think a lot of investments have happened in the last 4 or 5 years, and I think this is one of the key priorities for the government, and this will continue to see a lot of traction going forward also.
Right. Thank you very much, Ashish. Great talking to you and getting a perspective on roads and rails and what the sector expects from this much anticipated budget. We'll take a quick break. On the other side with Dr. Ashish Chatramuta from a markets angle of whether there is still a trading opportunity between now and the budget on rail stocks.